Right, let's wrap up the market week in the UK. Let's now bring in my colleague there in London, Juliana Olayinka. Hello, Juliana. Good afternoon. Well, it had been a very tough week for UK's politics and the Brexit deal. What's the outlook for next week?
Well, the outlook for next week, Chimeze, is going to be more of the same. Brexit is on hold in the UK at the moment. So every deal that's been done in the past is really just waiting upon the results on December the 13th. However, of course, there are some who would say that this December the 12th election is Brexit or another referendum in all but the name itself. It's been a pretty tough week for both main parties. The Conservatives didn't start well at all, as well as Jacob Rees-Mogg, the former leader of the House, making some awful comments about people in Grenfell. There has also been some accusations about one of their party members being involved in a rape trial, so he had to stand down for the party. Also, Labour, Jeremy Corbyn, the opposition leader, hasn't had a good couple of days. His deputy, Tom Watson, resigned, and this resignation was seen as a little bit of a shock and a stab in the back to him, because the two of them have quite openly struggled to come together on particular issues. So it hasn't been easy for them. The Conservative Party still in the lead by about 12 percentage points, but over the past couple of days, according to the latest polls, they've dropped down 2 points against Labour.
Eventful on your market street with Bank of England decision, earnings, and all of that. So how is today's trading day shaping up?
Well, at intraday, the FTSE 100 is still underwater. The FTSE All-Share is down 0.27%, and the FTSE 100 is down 0.26%. The FTSE 250 also down at 0.30%. Sterling not doing much better. In currencies, the British pound is down on the US dollar by 0.07%, up on the euro by 0.06%, and down on the Japanese yen by 0.02%.
Finally, what is the legal battle to stop UK Royal Mail strike action all about? What do the workers want, and when is the down tool scheduled to hold?
Well, Royal Mail, they've been to the High Court, well, they've written to the High Court saying that there were several irregularities involving last month's ballot, where 97% of workers who were involved in this union voted for industrial action. The workers say they're being bullied, they're not happy with working conditions, and they're also not happy that they're paid too little. Now, Royal Mail bosses believe that some of these voters, some of these workers were coerced into voting, so they were forced to say yes, and also ballots which are supposed to be private were not private. Apparently, there's about 70 different strike areas across the country where they believe they have evidence to show that the ballot just wasn't done correctly. Now, of course, Royal Mail bosses are not happy, because next month, when they're planning to take this industrial action, will affect their busiest period. People around the UK do like to post Christmas cards to their relatives, and that will be affected. And of course, as well, we've got the December the 12th election. There are several people, not just those who are unable to come out of their houses, but those who live far from their constituencies, who would typically vote via post. And if this strike does go ahead, then that won't happen. So it's going to be a long run, but Royal Mail believe that they can turn it around.
Well, Juliana, it's been a busy week for you and I, so it's time to say thank God it's Friday. Enjoy the rest of the weekend. And shares in Asia were mostly low on Friday as investors digested recent developments on the U.S.-China trade front. Mainland Chinese shares shared earlier gains to slip on the day. The Shanghai Composite declined 0.49%. The Shenzhen Composite also slipped 0.187%. Hong Kong's Hang Seng Index shared 0.84%. South Korea's Kospi declined 0.33%. Japanese shares backed the overall trend regionally as the Nikkei 225 gained 0.26%, and the Topix Index also rose 0.27%. And U.S. stock index futures were lower on Friday morning at around 1:30 a.m. Eastern Time. Dow futures fell 44 points, indicating a negative open of more than 10 points. Futures on the S&P and Nasdaq were both slightly lower. Investors are closely monitoring news on the China-U.S. trade front after a spokesperson for the Chinese Commerce Ministry said that both sides had agreed to cancel existing tariffs in phases. On the data front, there will be consumer sentiment figures out at 10 a.m. Eastern Time, as well as wholesale trade numbers. And crude oil futures fell on Friday amid lingering uncertainty on whether and when the United States and China will agree a long-awaited deal to end their bitter trade dispute. The gloom compounded by rising crude inventories in the United States. Brent crude, the global benchmark, was down 0.3% at $62.13 a barrel, while U.S. West Texas Intermediate crude was down 0.4% at $56.92 a barrel. The trade war between the world's two biggest economies has slowed economic growth around the world and prompted analysts to lower forecasts for oil demand, raising concerns that a supply glut could develop in 2020. And to metals market, gold prices were tepid on Friday after dropping up to 2% in the previous session as hopes of headway in the U.S.-China trade deal boosted risk on sentiment, denting the bullion's appeal. Spot gold was trading at $1,468.51 per ounce, while U.S. gold futures were up 0.2% at $1,469.80 per ounce. And Africa is poised to become the land of opportunity for bond and equity investors should the U.S. and China strike a trade deal, and that's according to Bank of America. The bank believes that the removal of tariff and recession fears, at least until the November 2020 U.S. election, should lead to some restocking event and green shoots by the first quarter. It notes that South Africa, Nigeria and Kenya may be among biggest gainers, while many investors remain skeptical about the successful conclusion of the current round of trade talks. The bank says an agreement will become more likely as the U.S. presidential election campaign approaches. A trade pact, according to BOFA, would reduce the risk of strengthening dollar, supporting emerging market currencies and high-yield debt. I will take a quick break, and when we return, of course, we get a sense of what the power situation is in South Africa from our correspondent there. To stay with us.